Good evening, everyone, and thanks for taking time to join us today. I'm Keith, the co-founder of RealVantage. For those who are new to us, we are an online real estate co-investment platform. We have been running this webinar series for a while with the aim to share with our users real estate investing from an institutional perspective. We seek to provide a more objective and technical approach in property investing, which we hope will be beneficial to our users. After all, real estate is a very capital intensive and illiquid asset class, so it's critical to get it correct. So joining me today is Brian, our Senior Relationship Manager. He will be touching on benefits of having real estate as an asset class in your personal portfolio and how RealVantage will help to fortify your portfolio and provide greater diversification of risk, all the more important during these times. All right, Brian, I hand it over to you.
Okay, thank you, Keith. Good evening, everyone. My name is Brian, and I'm the Relationship Manager here at RealVantage. So prior to joining RealVantage, I was a Relationship Manager at Standard Chartered Bank and DBS, where I was advising high net worth clients and accredited investors on investment products offered by the bank. So what I'll be sharing with you today consists of two parts. First, I would like to talk about how a typical portfolio looks like in terms of asset classes and their allocation according to risk profiles. Also, how co-investments like what we do in RealVantage can help to strengthen and diversify your portfolio. The second part of this webinar, I will also go through how to get started with us, the onboarding process, and how to start your first investment. Okay, so I will start by highlighting the different asset types that are typically offered and invested by retail investors out there. The asset types are depicted, as you can see here, on a risk and return curve, with returns and risk rising as you move up the curve. At the lowest end of the risk return curve is cash, and the highest end is private equity. So of course, if you are 100% risk adverse, you can stash your cash in your mooncake box or Milo tin in your mattress, but this has actually no interest, and also it will never grow. So also many of our clients also ask if a fixed deposit is good. So the answer is yes and no. Yes, because it's normally short term. No, because the interest rate given is very low. So at the beginning of 2019 last year, I remember that the banks were offering fixed deposit at about 1.7% per annum. And then right now, if you walk into the bank to ask their fixed deposit rates, is hovering around just like 1%. So if you take into account the average inflation is actually 2% per annum, such low interest rates like a fixed deposit is actually working against you. And next, a lot of people are also asking, what about government bonds? In Singapore, the most popular one is Singapore Savings Bond. But I just checked, the June offering for Singapore Savings Bond is actually 0.8% average over 10 years. So you can actually find a lot of investment easily that gives you better yield. Okay, and then moving up, government bonds, corporate bonds, we actually have real estate. So real estate as an asset class sits right in the middle of the risk return curve. It sits above our fixed income instruments and also just below equities. Given its risk and return rewards are balanced, logically speaking, you should actually allocate quite a huge amount into real estate. But just how much we will actually cover with you in next few slides. Now let's look at how real estate exposure is featured in everyone's portfolio. So the chart here shows the profile of asset allocation from three different risk perspectives. Starting with conservative on the left, balance in the middle, and growth to the right. This is based on a survey conducted by UBS on family office. Those who are not familiar, family office are essentially high net worth individuals who employ professionals to manage their personal or family wealth. According to a family office survey as seen here, it is clear that across different risk appetites, it is interesting here to note that real estate still features prominently as an asset class. It is the second largest allocation after equities. So the question here is, what is the right allocation? So here we can look at this report by David Swenson. He is a highly regarded investment guru and manager for Yale Endowment. He advises investors to invest 20% of their investable monies into real estate in his playbook. Right. So on a personal basis, I often hear that many folks invest in mainly equities, bonds, and real estate. It is either of these asset classes that take up the bulk of their investment. So from an Asian context, some may allocate up to 50, 60% in real estate. And in the news just recently, like maybe 1-2 weeks ago, there has been an increase in transaction of property sales in Singapore and Australia, mainly by Asian investors. So a lot of clients from China, they actually pump a lot of money into acquiring real estate in Singapore and in Australia, because Australia is also getting very, very popular. Okay, so on this slide, I like to compare 3 most common investment clients always ask me. So there are a lot of questions when it comes to such investment. When is a good time to enter? When is the right time to exit? Yeah, but to be very, very honest, I don't own a crystal ball to tell me when is the best time. So we have to invest with a very clear mindset of how much growth we want to see, our risk appetite, how much losses we can bear, and also risk horizon, your investment horizon, sorry. So for first, equities, price movement actually goes by the minute. So during the market downturn few months ago, even blue chip stocks plunged very badly. So let's take DBS for example. So DBS was trading at about $26 before COVID. And then when COVID really hit the market, it actually nosedived down to $16. So even if they give you dividends, right, your capital has already taken a 40% loss. And it will take months or even years to recover to back to $26 when it was. So before you look at equities, we need to really understand very clearly the business, and also there's a lot of risk, like market risk, interest rate risk, the business itself, there might be risk. So all this you really need to understand before you make a decision, and really study the company very well before you actually make that decision to buy a specific equity. So next we talk about bonds. So bonds are much different from equities. So most people buy bonds for its interest. So the prices of bond that we hear a lot, right, is actually will only affect you if you are planning to trade on the secondary market. And if you hold the bond until its maturity, you will actually get only the face value back. So one of the biggest risks in bonds is default risk. Although we don't really see that happening in Singapore, when it actually happens, the impact is very, very big. So mainly because the capital outlay for each bond is very high. So we are looking at 200,000 and above, 200,000, 250,000 per bond. So look at high flux. So a lot of clients are still stuck with high flux. They are not able to get their money back, and high flux is still an ongoing case. And even if there are mini bonds offered by companies, sometimes it's not really advisable because it tends to be more risky. So one of the very good example for risky mini bonds is Lehman Brothers. Yeah, so moving on to talk about real estate. So traditional real estate, right, be it commercial property or residential property, there is a capital security here. So the capital security is the intrinsic value of land. So what do I mean by this? Okay. So let's say you have $5 million and then you plan to buy a 3-story building in Singapore. So you rent the level 1 out as a coffee shop, level 2 and 3 as a office space. So your plan is to generate income, rental income. Okay. But if let's say the business is bad, they are not paying you the rent, they default on the rent, you still have the value of the building, right? Okay, worst case scenario, if your building gets burned to the ash, okay, uh, the building will not be worth 5 million anymore. So it'll be a land value. So the land value is the intrinsic value that is giving you the capital security here. So you would think that how many people can actually afford 5 million to invest in such real estate, right? So it's like bonds and equities. So there are actually a lot of alternatives out there. For equities and fixed income, the most popular alternative would be unit trust. People coming together, buying specific bonds. That's how you can gain exposure to such asset classes. So for real estate, a lot of people know that REITs, very popular in Singapore, is one of the alternatives that you can gain exposure to real estate. And now we have co-investment. Okay, so before I actually go more into what co-investment is, like what we do at RealVantage, I want to talk before and after COVID performance of different asset class. Okay, so what we can see here, okay, the prices of bonds is least impacted given its nature. It's more resilient, it's slower movement. But after COVID, we still saw almost a 4% drop. So REITs and equities is actually the one that suffered the most impact. So due to the lockdown and closure of businesses in many countries, REITs have suffered almost a 40% drop in their prices. So many of them have also announced a cut in dividend this year. So next we can look at real estate itself. So real estate meaning property price. Okay, so we are not looking at REITs. Now we are looking at specific property prices. And right now, this comparison is based on Green Street's Commercial Property Price Index. Yes, so we are looking at a 10% decrease after COVID. So uh, okay, so what we actually see in the market is real estate normally have a laggard impact. What happens to the market can happen overnight, but when we look at property price, okay, it's a laggard effect from what happened in the market. You can only see the price being impacted like maybe a few months later. So seeing that real estate investment is a very important asset class in your portfolio and how to gain exposure, okay, uh, seeing that REITs is actually still so uh, easily impacted by market movement, you can actually look at co-investment to gain exposure in real estate. So what exactly is co-investment? Okay, so co-investment for real estate seems like a pretty new concept, but in fact it's already something very popular in the US. So what we do here is to give our investors access to multiple deals by fractional ownership. This way, you can diversify across different real estate categories like commercial real estate, residential real estate, office buildings, etc. So you can also diversify across different geography and also different strategies. Now, we will discuss more about the different strategies later. Okay, so for RealVantage, we take pride in managing properties ourselves with our local partner. Unlike other crowdfunding platforms, we don't do capital match. That means we don't just bring investors and match capital to the vendors and then we just hands off after that. We don't actually do that. We actually manage it ourselves. Okay, especially when our founders personally invest in every single deal that we release online. And our asset managers will then continue to manage the asset throughout the investment period. And also we provide updates to our investors on a quarterly basis. So all our deals are institutional quality, meaning that they are not just deals that individuals can gain access to easily. You can look at our past webinar to understand how we source for our deals. and what factors we evaluate before listing them on our platform for our investors. Okay, so investment strategy. In co-investment, we have different strategies that cater to investors with different risk profile as well. So mainly they are core, value add, opportunistic, similar to the risk reward spectrum earlier on in the presentation. So core deals are projects that have secured a long-term tenant. They are typically income producing assets like petrol station or office building leased to government agencies. So next we have value add. Value add deals can be newly furbished office buildings, redeveloping of vacant space for rent. And then lastly, on the right of the risk reward spectrum, opportunistic deals. Okay, this carry slightly more risk. So opportunistic deals offer the highest capital returns, also high on the risk spectrum. These deals can be development deals of new apartments, distressed assets for immediate sale. So if you're wondering what kind of deals are they specifically, I do have an example to share later on in our presentation. So now you know what is co-investment. Let's do some comparison to REITs. Okay, so there is no capital security with REITs. Given that it's listed on the capital markets, the price movement of REITs is very dynamic and volatile. And also one restriction of REITs is the investment strategy itself. So because the assets owned by REITs must be income producing to generate the dividends for investors, they are limited to core deals. So capital appreciation tends to be slower and investors have no control over specific properties. And also because REITs is quite similar to equities, REITs also carry what we call dilution risk, where the fund manager, they actually issue more stocks and dilute the percentage of ownership for all investors. For co-investment, we don't have such a risk, okay, because we use an SPV to own the specific property, and the percentage of ownership will never change once the SPV is incorporated. Yeah. And okay, and also co-investment is unlike REITs. Okay, the capital security is the intrinsic value of the land. So this is something that I mentioned earlier. Uh, okay, so along with capital appreciation, core value add deals actually gives more income and more investment opportunity to see growth in your capital for our investors. So one very important fact for co-investment is that the investors have the power to choose exactly which property they want to invest. So I give you an example. Okay, I know that let's say in Singapore, Jurong Point is a very popular shopping center, but not all shopping centers in Singapore are doing as well. Okay, so if I want to gain exposure to Jurong Point, okay, by investing in REITs, I have to consider the fact that this is just a property part of a very big portfolio. But if let's say I am able to gain access to this shopping center, this specific Jurong Point shopping center by co-investment, then I'm only invested in that one project. So this is the difference between REITs and co-investment. Okay, so yes, co-investment seems very attractive now, but we do have one drawback, which is that okay, the minimum investment sum for co-investment is typically higher than REITs. Okay, so using $1,000, you're able to invest in REITs already, but co-investment normally it goes for 10,000 and above for every investment. Sorry. Yeah, and also co-investment platforms around the world can only accept accredited investors. So for RealVantage at this time, we are only able to accept accredited investors. So what is accredited investors? This one is something I will cover in the next part of this presentation during the onboarding process. Okay, so next, let me share with you. Okay, this is one of our deals that we closed earlier in the year. Okay, just an example. So this is a value add deal, right? Okay, and this is the heritage building that sits right in the center of Adelaide CBD. It's a 3 years investment term, giving our investors a projected return of 12% per annum, or 36% real returns at the end of 3 years. So this deal is actually very special. It's a heritage building, but it was poorly maintained. The tenancy was only at 29%. So what we actually did is we acquired a building. We stepped in to enhance this building, refurbishing it, and also adding some retail space on the ground floor. So after all these refurbishments and touch-up works, we actually foresee more foot flow, more traffic. Yeah, and this will attract newer tenants. So the reason why I'm actually highlighting this specific deal to illustrate is because you can actually use 10,000 to gain access to such opportunity, which is not something that regular investor can actually just go into Adelaide and decide that, well, I want to buy this building. Yeah, and also through this diversification, you also through diversifying your portfolio, real estate section of your portfolio, you gain access to other markets. Yeah, you reduce the volatility as well, and also diversify with lower quantum instead of buying a residential apartment in Melbourne or in US, and your down payment is 500 to $1 million, not factoring in stamp duty, other tax. So I hope that I covered enough here about co-investment and how you can use co-investment to enhance your portfolio. Yeah. If you have any questions, you can also add it in to our chat section here, and we will address this together with Keith to at the end of this presentation. So just feel free to keep your questions coming.
Okay, so the next part of our webinar, we will be going through on how to get started with us. So if you don't already have an account with us, you can go to www.realvantage.co and create an account. Then go to your email to verify the email address that you have entered for registration. So after you have done that, okay, you will have to update your particulars with us. So you'll come to this page where you can actually complete your details. Okay, so let me just start here. Okay. Okay, so I'll have to use my real one, and then everybody will know my age. Okay, so occupation. Okay, source of wealth is important because this is for compliance record and also to understand where your wealth derived from. So for me, I would put just an example here, employment income. Okay, and then you can just put a description here like this savings of salary over the years of income. Okay, and next will be are you a politically exposed person? So if you are closely related to any political parties like ministers, or you yourself is a minister holding a political office position, please let us know. Okay, if not, you can just simply click no and continue. So for this part, you will have to upload your NRSC or your passport. So for Singaporeans and PRs, when you have your NRSC, you can just upload under this portion. For all other nationalities, you can just upload a copy of your passport. Okay, so make sure that the document is clear. So we are able to see every all the information on your IC clearly. Okay, so the front and back. Yes, and for this step, you just have to key in your IC number. Next will be your residential address. So if you are a Singaporean or PR holder, you can actually re-upload the back of your NRIC for this part. If not, if you're using your passport, we'll need you to submit another additional proof of your residential address. This can come in the form of your bank statement, utility, or phone bill within the past 3 months. Okay, so for me, I'm going to upload the back of my NRIC again. So key in your address again. You can just make sure that the address is the same as the one that you have uploaded previously. Make sure that both address tally. Okay. So the next question here is, are you a accredited investor? Okay. So to qualify for accredited investor, you will need either one of these three qualifying criteria. Okay, so personal assets exceeding 2 million, meaning that if you have cash, real estate, investments totaling up to 2 million, you will be able to qualify. So do note that if you are using the residential property that you are currently staying at to qualify for one of these, to qualify for this criteria itself, the maximum value we can take is only 1 million. So for example, if your current residing property is worth 2 million, and you have another property worth 1.5 million, you will be able to qualify as your residing property is value taken maximum 1 million plus your second property 1.5, so that makes 2.5 million. So you'll be able to qualify. So you can send us a proof of ownership like sales and purchase agreement or your property tax bill. So if you have any questions regarding how you can use different asset types to qualify for this, you can just reach out to RealVantage. One of our relationship manager will get in touch with you to help you go through to see if can help you to qualify for accredited investor. Okay, so the next one is financial assets to qualify. Financial assets is pretty straightforward. If you have liquid cash or investments like stocks and shares totaling up to 1 million, you will qualify. So for this, you just have to submit your bank statement or maybe your CDP account statement to show that the total liquid asset here is more than 1 million. Okay, so the last criteria that you can use to qualify for accredited investor is by income. Okay, so if your notice of assessment, your income is 300,000 or more in the preceding 12 months, okay, you'll be able to qualify. So the eligible documents for this will be your notice of assessments from IRAS or your past 3 months latest computerized payslip. Okay, so let's say I'm using this to qualify. Okay, I'll just upload the document here. Yes, so once you have submitted this, give us about 1 to 2 days to complete all our AML and KYC checks. Okay, this is for compliance reasons because we are highly regulated by MAS as well. Okay, so once you clear your KYC and AML checks with us, you'll be able to make your first investment. Okay, so for demonstration purpose, let's say I would like to invest in this opportunity. All right, so just click into it. Okay, and for this opportunity that we are looking at here, the minimum investment is 25,000. So I'll just key in 25,000 here that I'm going to invest. Okay. So key in your legal name as per your NRIC. Okay, and a letter of offer will be generated for you. So after you submit, we will reserve the indicated amount for you, and you will have 3 days to fund your account. Okay. Since I have no money in my RealVantage account because it's a new account, okay, I will have to deposit the
indicated investment amount separately. So I just have to key in that, okay, I'm using $0 from my RealVantage account, and additional deposit of 25,000 will be deposited over the next few days. Okay, so I confirm here that I will be depositing 25,000 Aussie dollars. Okay, so we will need to make sure that the amount of money that is coming from you is from your bank account. So you will need to give us your bank details. So from which account that you will be transferring from, right? So to add a bank account, very simple. Okay, key in the name of the account holder. Okay, which account is it? Okay, and which bank is it from? Okay, so the bank code will be the bank code will differ for every bank, and the branch code is always standard. The first three numbers of your account number. Okay, so we will need you to upload your bank account statement as well. This will show your full name and your address. Also, it must be within the last 3 months of your of the issuance of this letter and of your bank statement, right? And this have to show your bank account number as well. So let me just use this for example. Okay, so now that you have uploaded your bank account statement and also indicated how much money you'll be transferring to deposit, okay, this will be our wiring instructions here. Okay, so our escrow account here is managed by our lawyers. So there is there is a difference in the name. So don't be confused. Yeah, LegalWorks is our escrow agent. So they will handle our escrow account to make sure that there is no commingling of funds. This is to make sure that, you know, if you have indicated that you are putting $25,000 into this specific deal, okay, once you deposit the money, $25,000 will be secured for this deal, and you will not be commingled with other purposes. Okay, so once you have transferred the money, okay, you can just come back into the website to indicate to us that you have transferred. And give us about 2 to 3 working days. We will update your RealVantage account to reflect that you have already, we have already received your deposit, and you will go into the deal, the opportunity here again to confirm your investment. And from there on, we will send you this investor participation agreement. Inside, it will indicate your ownership percentage as well. So this will not change, right? Okay, so I have come to the end of the demonstration here, how to get started with us and also how to make your first investment. Okay, if you encounter any problems during this whole process, you can just reach out to us anytime and we will help you immediately. Okay, so I'm done here, and let me have Keith back to join us for our Q&A. If you have any questions at this time, please feel free to go into our chat box and just type your questions here.
Hi everyone, sorry, I was on mute. Yeah, Keith here again. Now, there are a couple of questions here. The first one is, what is the investment period for co-investment? Well, our deals ranges from 1 year all the way up to 5 years. So each deal is different. For example, if it's a small development project, which we have recently, the investment period is only for 1 year. Whereas there's another one that we funded, which is a income producing stable income asset that rides up for 5 years, right? So it ranges, it's deal by deal. Next question is, what is the typical yield for co-investment? Oh, that's a very good question. So what's the returns, right? The returns ranges. Like if you are looking for passive assets, passive what we call core assets, the returns are typically between 6 to 9%, that range per annum, right? If you are looking for a development deal, or what Brian just said, an opportunistic deal, the returns are usually 18 to 20% per annum. But the returns for opportunistic deals tends to be back-ended. It comes in at the end, right? Also, just to highlight, our returns are always post fees and post tax. So all the tax related issues have been handled by us. You don't pay any more tax when it comes back to you, right? Next question from Matt. Wanted to explore the opportunity, but it seems like your site currently doesn't have any at the moment. Why is that? That's a very good question as well. Yeah. At this moment, as what we are going through the COVID situation, we have not been able to find a very compelling deal to put up on our site. We have been hunting very hard. As you know, the COVID situation has taken a big toll on businesses, and that will eventually filter down to real estate. So we see eventually there'll be some distress, and obviously there'll be some softening in prices. Hence, we are being very patient here. We're waiting for essentially good deals to come up, right? Next question. How has low interest rate affected real estate investments? Oh, that's a very good question. Yeah. The low interest rates, it's actually good if you are in the buying mode. Obviously, cost of capital is cheaper. You work there, you can hunt for even lower yielding assets for that matter, because the spreads are wider now, right? I think interest rate is a double-edged sword as well. You know, in a low interest rate environment, that's what you see right now. There are also concerns about the economic growth of the country, right? So bear in mind that that also affects to some extent rental growth. So there is a double-edged sword in how the interest rate environment pans out. But when you are in a buying mode, low interest rates environment is always beneficial, right? Where are you seeing the good deals now? Okay, right. Right now we are very selective in terms of the markets, but our favorite markets will always be Australia, UK, as well as the US. Because these are the markets which we believe gives the best risk-adjusted returns, right? What we mean by risk-adjusted returns is that the returns will commensurate with the amount of risk that you take, right? These three markets are selected simply because, number one, they are very transparent. The rule of law is clear. The regulations, the regulatory framework is also very clear. So we go into a market knowing that the capital is well preserved. That's one key consideration with the market, right? So just going back again, the key markets will be US, Australia, as well as UK, right?
Okay, any more questions? Maybe we can do one more question before we end our webinar tonight. Okay, Keith, we have a last question. Matt just asked, what is your view on Singapore properties right now?
What is our view on Singapore properties right now? All right. Singapore properties, it's always a market that we are very close with, and a market that we know it very well. And without a doubt, I think in our view, our firm's view, there will be more downside rather than upside. Right? We look at it simply because Singapore is a very open economy. And as you can tell, the government has dished out a lot of stimulus packages. That essentially will filter down, yes, but it's only a temporary measure. Businesses will be severely affected, and some will close. And that's when the rental properties, offices, retail properties, some of them will be under pressure, right? So we see definitely softening in prices in time to come in the Singapore market now. How deep it will go, It's hard to tell at this stage. You know, it really depends on how fast we pick ourselves up as an economy and how we recover from this virus. Right? But you know, Singapore real estate has always had a very strong demand, not just only locally but overseas demand. Despite this, you see the stamp duty that has been imposed on residential properties. The demand is still very strong, right? So that's why I think when should we start buying? For example, you might ask, when should we start buying Singapore properties? My view is when the government removes any measures, that's when it's worth buying. That's my view. Yeah, that's when prices have come off, and that's when prices would have bottomed out. Right? That's what I feel. The last question, Brian, you want to take it? When do you think COVID will be over?
Okay. I think COVID, nobody knows when it'll be over. Every country is working very, very hard right now to find a vaccine. So until there is a firm vaccine in testing and begin on human trials, we won't be confident that COVID will be over anytime soon. So what we will be looking at is how to cope with life with the new normal, how we carry on our day-to-day activities with what you call that, social distancing. So for now, we just have to make do and live life as instructed by the government, and hope that a cure will come soon. If not, then we just have to make do with the new normal. Yes. So if there is no other questions, we thank you so much for joining us again tonight. And you can just reach out to us anytime, info@realvantage.co. And anytime you have any other questions, just reach out to any of us. Thank you so much.
Thank you very
Keith,
much
for joining us again.
Yeah, thank you. You have a good night,
Thank you.
everybody.
Good night, everyone.
Thank you.
Bye-bye.
Yeah. Well done.